Lecture 5. Bad debt. Article number 25 of the Law 91 of year 2005 and its amendment states that deduction of bad debt is excluded by the taxpayer from the firm books, and accounts may be permitted if he presents a report by an accountant enrolled on the accountant and auditor's register indicating the fulfillment of the following requirements. Number 8. That the firm keeps proper accounting records. Number B. That the debt is associated with the firm's business. Number 3. That the amount of the debt has been previously included in the firm's accounts. Number D. That the firm has taken serious action to recover the debt, but failed to collect it after 18 months of its due date. The taxable loss. Article number 29 of the Law number 91 of year 2005 and its amendment states that if the final account of a year is closed in a loss, the loss shall be deducted from the succeeding year's profit. If, however, part of the loss remains, it shall be carried forward to the succeeding year up to the fifth, after which no loss can be carried forward. Exemption from the tax. Number 1. Profit of land reclamation or cultivation establishment for a period of 10 years effective from the date of beginning of the exercise of activity. Number 2. Profit of establishment of poultry production, beef breeding, cattle breeding, and fatting pens for a period of 10 years from the date of beginning the exercise of activity. The exemption prescribed for livestock breeding and fatting holds shall comprise the dairy products produced by them, providing the trade activity in milk and dairy products shall not be exercised independently. Number 3. Profits of establishment of fisheries projects, as well as profits of trawler projects for a period of 10 years from the date of beginning the exercise of activity. Number 4. Yield of the natural persons dealing in their investment in securities listed in the Egyptian Stock Exchange, along with non-permitting the deduction of losses resulting from this dealing or carrying them forward to the following year. Number 5. All that the natural person obtains as represented in interest of all kinds of debenture and finance bonds listed in the Egyptian Stock Exchange, which are issued by the government or association of capital. Dividends of the shares of the capital of the joint stock companies and partnership limited by shares. Dividends of the shares of the capital of limited liability companies, partnerships, and non-shareholder partners in joint stock companies and partnership limited by shares. Dividends of the investment securities issued by the investment fund. Number 6. Returns obtained by the natural person from deposit saving accounts in banks registered in the Arab Republic of Egypt. The investment saving and deposit certificates issued by these banks as well as deposits and saving accounts in postal saving banks and the securities and deposit certificates issued by the central bank. Profits realized from new projects funded by the social fund or development within the limits of the ratio of such funding to the invested capital at a maximum of 50% of the annual profit and at no more than 50,000 livres Egyptian for 5 years starting from the date of exercising the activity or commencing production, as the case may be conditional on keeping regular books and accounts. The exemption shall be conditional upon the following. Exemption from the tax. Number 1. Profits of land reclamation or cultivation establishment for a period of 10 years effective from the date of beginning of the exercise of activity. Number 2. Profits of establishment of poultry production, beef breeding, cattle. Note that the period of fiscal exemption shall be for 5 years beginning from the date of exercising the activity or starting the production according to each case. Applying that exemption shall be discontinued if the establishment is alienated or its legal form is charged. In all cases, this fiscal exemption shall only apply to the profits resulting from the finance provided by the social fund for development. Example 1 on page 194. Individual projects obtain finance from the social fund for development at the beginning of year 18 amounted to 100% of its capital and immediately started the commercial and industrial activities. By the end of the year, the income statement showed net income for the year of 80,000 livres Egyptian. Required, give the tax treatment of the taxpayer for year 20 and 18, assuming that the project maintains regular accounting records and accounts. Answer. The profit of this project is exempted from tax for 5 years starting from exercising the activity beginning of year 20 and 18 up on the following conditions. The profit of the project shall result from exercising the commercial and industrial activity exclusively. The project shall assume the form of individual establishment. The fiscal exemption shall only apply to the profits resulting from the finance provided by the social fund for development. As the finance obtained is equal 100% of the project capital, then 50% of net income of the project for the year equals 80,000 livres Egyptian times 100%. The percentage of finance times 50% equals 40,000. The annual maximum limit of exemption 50,000. Then 40,000 livres Egyptian of net income of year 20 and 18 is exempted within the maximum limit, and the remainder of 40,000 is taxable. Example 2 on page 195 refers to example 1. Assume the net income of year 20 and 18 amounted to 120,000 livres Egyptian. Required, give the tax treatment of the taxpayer for year 20 and 18. Answer. As the finance obtained is equal 100% of the project capital, 50% of net income of the project for the year equals 120,000 livres Egyptian times the percentage of finance 100% times 50% equals 6,000 livres Egyptian. The annual maximum limit of exemption is 50,000 livres Egyptian. Then 50,000 livres Egyptian of net income of year 2018 is exempted because it is within the maximum limit, and the remainder of 70,000 livres Egyptian is taxable. Example 3 on page 196. Individual projects obtain finance from the Social Fund for Development at the beginning of year 2018 amounted to 60% of its capital and immediately started the commercial and industrial activity. By the end of the year, the income statement showed net income for the year of 150,000 livres Egyptian. Required gives the tax treatment of the taxpayer for year 2018, assuming that the project maintains regular accounting records and accounts. Answer: the profit of this project is exempted from tax for 5 years, starting from exercising the activity beginning of year 2018 here, up on the following conditions. The profit of the project shall result from exercising the commercial and industrial activity exclusively. The project shall assume the form of individual establishment. The fiscal exemption shall only apply on the profits resulting from the finance provided by the Social Fund for Development. As the finance obtained equals 60% of the project's capital, then 50% of the net income of the project for the year resulted from the finance obtained equals 150,000 livres Egyptian times the percentage of finance of 60% times 50% equals 45,000. The annual maximum limit of exemption is 50,000. Then 45,000 livres Egyptian of net income of year 2018 is exempted because it is within the maximum limit, and the remainder of 105,000 livres Egyptian is taxable. Example 4 on page 197. Individual projects obtain finance from the Social Fund for Development at the beginning of year 2018 amounted to 75% of its capital and immediately started the commercial and industrial activity. By the end of the year, the income statement showed net income for the year of 200,000 livres Egyptian. Required gives the tax treatment of the taxpayer for year 2018, assuming that the project maintains regular accounting records and accounts. Answer: the profit of this project is exempted from tax for 5 years, starting from exercising the activity beginning of year 2018 up on the following conditions. The profit of the project shall result from exercising the commercial and industrial activity exclusively. The project shall assume the form of individual establishment. The fiscal exemption shall only apply to the profits resulting from the finance provided by the Social Fund for Development. As the finance obtained is equal to 75% of the project's capital, then 50% of the net income of the project for the year resulted from the finance obtained equals 200,000 livres Egyptian net income times percentage of finance 75% times 50% equals 75,000 livres Egyptian. As you know, the annual maximum limit of exemption is 50,000 livres Egyptian. Then 50,000 livres Egyptian of net income of year 2018 is exempted because it is within the maximum limit, and the remainder of 150,000 livres Egyptian is taxable. Accounting profit versus taxable profit. Accounting profit is the balance of income summary that determined according to generally accepted accounting principles, GAAP, or the requirements of the Egyptian accounting standards. Note: the main objective of tax accounting on commercial and industrial activity is to transfer the accounting profit into taxable profit. The differences between accounting profit and taxable profit. These differences can be divided into two categories. Number one, permanent differences, resulted from the difference between accounting treatment and tax treatment and can not reverse in subsequent periods. Examples are number one, revenue recognized for accounting purpose that is never taxable, such as returns of deposits and saving accounts with banks. Number two, expenses recognized for accounting purposes that are never deductible for income tax purposes, such as life insurance premium on employees. Number three, income tax deduction that are not considered as expenses for accounting measurement. Profits realized from new projects funded by the Social Fund for Development, within the limits of the ratio of such funding to the invested capital, at a maximum of 50% of the annual profit and at no more than 50,000 livres Egyptian for 5 years, starting from the date of exercising the activity or commencing production, as the case may be conditional on keeping regular books and accounts. The exemption shall be conditional upon the following. Examples are number one, insurance compensation reported on accrual basis for accounting purposes and on cash basis for tax purposes. Number two, the initial depreciation of depreciable plant assets for income tax purposes, noting that this initial depreciation is not considered for accounting measurement. Number three, rent received in advance is taxable when it is received, but is recorded under accrual basis for accounting measurement. Number four, product warranty costs that are estimated and recorded as expenses at the time of sale of the product for accounting measurement, but deducted as actually incurred in later years to determine taxable profit. Example 1 on page 200 on your textbook. A commercial sole proprietorship uses periodic inventory system. Its income statement showed net income of 80,000 livres Egyptian for the year ended December 31, 2018. A tax investigation of the tax officer revealed the following. Number one, sales invoices amounted to 5,000 livres Egyptian were not recorded in sales account. The cost of goods sold amounted 60% on sale. This means that there is a decrease in gross profit. There is a decrease in gross profit of 40% of the 5,000. Number two, purchases account includes a purchase invoice recorded twice in the books for 800 livres Egyptian. This means that the gross profit is understated of 800,000. To adjust, you must add 800,000 to accounting net profit. Number three, goods that had been consigned to consignees were recorded as sales at a markup of 25% based on cost. At the end of the year, the taxpayer was notified that a part of this consignment, costed 6,000 livres Egyptian, still remaining unsold in the hands of consignment. This means that the taxpayer overstated the sales. As the sales overstated, then the gross profit is overstated. Then the accounting net income is overstated. To adjust, deduct 1,500 from accounting net profit. The markup on consignment unsold, 6,000 times 25%. Number 4. Goods drawn by taxpayer for personal use that not recorded in the record. Its cost amounted to 1,000 livres Egyptian and its market value is 1,300 livres Egyptian. This situation overstated the purchases. As the purchase is overstated, then the gross profit is understated. As the gross profit understated, then the accounting net profit is understated. To adjust, add 1,000 livres Egyptian to the accounting net income rather than the market value of 1,300 livres Egyptian. Required, prepare the necessary adjustment to determine taxable net profit of the year 2018. Answer: to transfer the accounting net profit into taxable net profit, we follow the following. The beginning of the accounting net profit as reported, 80,000. Add gross profit of sales that not recorded, 5,000 times 40%. As the cost of goods sold, 60%, then the gross profit percentage is 40%. Can be added to accounting net profit of 2,000. Purchases invoice that recorded twice, 8,000. Not recorded drawn goods by taxpayer at cost, 1,000. Less markup on consignment unsold, 1,500. 6,000 cost of consignment times markup percentage based on cost. Total 2,300 positive added to 80,000, then the taxable net profit amounts to 82,300. Example 2 on page 201. An individual sole proprietorship uses perpetual inventory system. Its income statement for the year ended December 31, 2018 showed net profit of 90,000 livres Egyptian. A tax investigation by the tax officer reveals the following. Number 1. Freight in of shipments of raw materials amounted to 2,200 livres Egyptian paid in advance and related to shipments will be received in March 2019. 2. Salaries and wages of workers did not include 6,500 for the month of December. As a quick thinking, number 1, freight in of shipment of raw materials that bid in advance and the shipments will be received in March 2019 and the next year. This amount can be deducted from the accounting net profit because it is not related to the current year. Salaries and wages of workers did not include 6,500 for the month of December. Then 6,500 can be deducted from accounting net profit because this means that the expenses are understated. As expenses are understated, then the net profit or the accounting net profit is overstated. Wrong. To adjust, deduct 6,500 livres Egyptian. Number 3. The cost of raw materials inventory at the end of the year amounted to 10,000 livres Egyptian and its market value amounted to 12,000 livres Egyptian. The enterprise used to value it at cost. But this year it is valued at 10% below cost as a conservative procedure. As the purchases or the inventory purchase recorded below cost, this means that the gross profit is overstated and consequently the accounting net profit is overstated. To adjust, deduct 1,000 livres Egyptian from the accounting net profit. 10,000 livres Egyptian, the cost times 10%. 4. Purchased raw materials amounted to 3,400 livres Egyptian were not including in ending inventory of raw materials. As this amount is not including in ending inventory of raw materials, this means that the gross profit is overstated. Also, the accounting net profit is overstated. To adjust, deduct 3,400 livres Egyptian from the accounting net profit. Number 5. Sales revenue balance included 3,000 livres Egyptian as market value of products withdrawn by the taxpayer for his personal use. Its cost amounted to 2,250. As you know, the taxpayer does not profit from itself. Then the accounting net profit is overstated of 750,000. To adjust, deduct 750,000 from it. 6. Other revenues of the enterprise included interest on saving deposit at Mr. Bank for year 2018 of 1,800. As you know, the interest and deposit of 1,800 is not taxable or exempted. As the enterprise included it in revenues, this means that the accounting net income is overstated. To adjust, deduct 1,800. Required, prepare the necessary adjustment to determine taxable net profit of the taxpayer for year 2018. As the finance obtained is equal 75% of the project capital, then 50% of the net income of the project for the year resulted from the finance obtained equals 200,000 livres Egyptian net income times percentage of finance. 75% times 50% equals 75,000 livres Egyptian. As you know, the annual maximum limit of exemption is 50,000 livres Egyptian. Then 50,000 livres Egyptian of net income of year 2018 is exempted because it is within the maximum limit, and the remainder of 150,000 livres Egyptian is taxable. Answer: to transfer the accounting net profit into taxable net profit, we follow the following. The beginning of the accounting net profit as reported, 80,000. Add gross profit of sales that not recorded, 5,000 times 40%. As the cost of goods sold, 60%, then the gross profit percentage is 40%. Can be added to accounting